tomorrow?
Zoom for tomorrow?
Yes.
Yes, there will be a Zoom for tomorrow. That's where we're gonna go over futures, what they're looking like. And
Okay.
that's where we're gonna go over the charts. All right, we're gonna do the charting, then we'll go over the SPY, what we're looking for, and stuff like that. So the Sunday meeting is gonna be more about charts and about reviewing the plays that we took the week prior, right? So we're gonna review those, which ones we lost on and which ones we won on, and what we were seeing, or what I was seeing on the charts and why we took the play and why it didn't go in the direction that we were looking for, right? So stuff like that. Voice chat, this is not applicable. This is Discord, it's voice chat. If you want to get on voice through Discord, I just use the phone and the Zoom. I'd have to get a mic and stuff like that. Mods, this is just moderators, they're in the group. Discussions, right? General chat, just talk about random stuff there. Stock information, if you have some kind of information about stock, right? You can post it in here. Day trades, this is where we'll talk about day trades. So there's a day trade alerts, right? But if you realize it is read only, you guys cannot type in here, right? Because if you were to type in here and I send out an alert, it's gonna get lost because it's gonna get pushed up into the chat. So if you have any questions about the day trade alerts, you're gonna ask that question in the day trades. If you have a question about the options alerts, you ask it in the options trade, right? Zero cool questions. If you have a question that you want me to answer, you could type it in here. But people in the group that have knowledge, they'll answer it for you, right? But if you want me to answer specifically, you could just
Excuse me, good morning, everyone.
Morning.
All right. Also, in members alerts and the members discussions, alert discussions, that one, the alerts that members put out in there gets lost when you respond or ask questions. You should do that in the other one, right?
Yes. So member alerts, right? This should just be the alert. There shouldn't be any talking because the alert is going to get pushed back. Once you start to talk in here, the alert is going to get pushed back and you're going to have to scroll back to find it. So that's why you want to have the member alerts discussion. You talk about anything related to the alert that was sent out in the discussions channel, because you want to keep it right. Because if you look at my alerts, right, there's no talking in here. So if I sent out something and you want to find it, you can literally come right here and you'll see the alert right there. You're not going to see any talking. You're not going to have to scroll all the way back to try and find something that's in there. That is the only way to make it, efficient so that you can find the alerts as fast as possible. Where was I at now? Brokerages, right? If you have a question about a broker, you ask it in here. If you have a question about Webull, Trade Zero, whatever it is, right? You can ask that question in your TD Ameritrade. Yeah, ask it in there. Crypto, right? I'm not a crypto guru, right? I just get information from my mentor, which is Boss, as you see in the screenshot right here, and I put it out to you guys. I don't trade crypto. Like most people, I have SHIB, that's about it, but I don't actively trade any coins or anything like that. But if I get the info from somewhere, and it's always going to be correct info, you can see in November, or I think it was October, Bitcoin, before Bitcoin ran on that run around 40,000, I was like, hey, Bitcoin's going on a bull run, right? But they're going to short it back down to 28,000. And I was coming right back down because they have a huge head and shoulder on the daily, and it's at 40,000. So I saw it at 48,000 2 days ago, and it's dropped $7,000 since then because there's a head and shoulder on the daily. Just like the SPY has a head and shoulder, right? And it falls down. Bitcoin has a head and shoulder, it's going to fall down as well. Large cap, we don't use this channel because I think majority of people in here cannot afford to buy large cap stocks. So, we're talking about shares of, Microsoft, Apple, stuff like that, Tesla, right? Short chat, if you want to learn how to short, right? I'll put out short. I'm gonna make a short alert as well up here. And then we'll talk about the short, what we're shorting in here. Shorting is a lot more beneficial to me than buying a stock and hoping for it to go up, because they all come back down eventually. Profit post, this is where you post your profit. If you took a play and it was profitable, right? It doesn't have to be my play. It could be a play from anybody in here, a play that you took on your own. You could share it in here.
Question.
Yes, go ahead.
The day trades
Mhm.
and short alerts. I know mostly your shorts, you do that in pre-market timing, right?
Yes, that is correct.
Okay, so my question is, would it be, so if you put out an alert for short, can, it's only for shorting, you can only short, you won't be able to put puts or anything, and most of those things are just stock trades, right?
Yeah, most of those are penny stocks, and penny stocks, you definitely don't want to do options on them. To me, I don't know, when a stock is selling for $5, $4 per share, you're gonna do an option on it. I don't know, it just doesn't make sense to me.
Yeah, it's a big risk.
It's a big risk, right? It has to, drop hard or something like that fast. It's just, there's just way too many other things out there that you could play options on. Yes, they're cheaper because they're cheap penny stocks, right? But there's way more things out there that you could use your money more wisely.
Yeah.
Yeah, exactly. To play an option, because SPY, you can get an option for 30 cents, right? For 40 cents or $40, and it can make you a good amount of money if it goes in your direction, right? So penny stocks, you're probably going to pay around the same. And the SPY, you can see it has major swings in any direction, right? Up or down, right? You're talking about, look at this huge swing here, 470 down to 465, then we're back up to 470. You know how much money you can make in here if you could catch these moves in here? You can make a lot of money on that $5 drop and that $5 rip. Like literally, you let's just say I took 100 contracts here at the top. Just say I timed the peak, and it drops down here $5. I can make $50,000 in that drop there. And then let's say I buy the bottom here with 100 contracts, and then it rips up $5. I can make another $50,000 right there. Let's just say I did it perfectly. And I can make $100,000 literally from the SPY trading at 9:30 up to, what is this, 12:50. So about 3 hours, right?
And what kind of investment?
With 100 contracts, let's say if this thing is down here 465, you buy a 466 or 467 call, right? 100 contracts is going to cost you about $20,000. They're probably going to be selling for $2 premium, and they're with this gap up here, they're probably going to go from 2 to maybe 5, 6, somewhere around there, right? So you could literally make maybe 200%. So if you put in 20,000, you make 200%. Your return is 40,000.
Yeah, and if you only put in 200, I guess you still make
exactly
20%.
Right. Yeah. So these huge moves here, you can make a lot of money. But if you have a small account, then yeah, you put $200 in, and it goes up here, and it gives you 200%. Yeah, you're gonna make $400. But at the same time, what if your account is 1,000? You just made 400. You just increased your account by what? 40% or something like that, right? So you see how you can increase your account, with just a SPY alone. I'm not saying you should just play SPY alone, because it's really volatile. But if you can master one thing at a time, one ticker at a time, right? Don't go spread yourself all over looking for 20 different tickers. Find one or two and master, and watch how it trades. Watch the trend, and you could literally just trade those 2 tickers. Some people trade options just on Apple alone. Literally, you have millionaires out there that are just trading Apple alone. That's it. They wake up, they trade Apple, they make a couple $100,000, and they're gone for a day, because it swings maybe $1.50 up and $1.50 down, maybe $1 at most, but that's all you really need when your account is big, is $1 move Up
Yeah,
or down with Apple.
we have Wild Billy, and he just like I think he's focusing basically Tesla and what is it, the AMC.
Yes, Tesla and
So,
AMC. Yeah,
yeah, so with that, I mean, you don't like it's a bad concept or misbelief to think that you need to trade 100 stocks. You can't manage 100 stocks.
exactly. Yeah, because now you're going to overburden yourself and you're going to be all over the place,
Yeah,
right?
because
Your mind's
one
going to
is
be everywhere.
what are you going to do with the other 99?
Exactly. You can't watch 99 tickers at the same time. So
Correct.
you have 10 different options that you played. There are 10 different tickers that you have to manage in your portfolio, right? And they're going up and down, up and down. There you're all over the place because you can't watch all of them at the same time.
You get brain fog.
Exactly. So, find two tickers that you like, and you could literally watch those, right? I like the SPY because there's a lot of liquidity in it. I like SPY. I like Microsoft and Facebook, but I'm not touching Microsoft right now. It's just way too close to the
Earnings.
earnings, and then the 50-day moving average is at 305. It has to stay above 305. It's just too close to it because once it goes under there, it's going to become bearish. On the 305, it could fall back down to around 280.
Yeah, but right now it's what's the price right now on Microsoft?
314.
314. See, there's still a $7 move that
Mhm.
if you want to cut it close, right?
Yeah, and that's why you have to cut your loss quick, right? Because if it goes under that 305 and you're down, 50, 60%, whatever it is, and you hold it, it could fall all the way down. That's why there are levels on the charts, right? When you break under a certain level, a certain price, you're looking for it to fall down, like maybe another $10, $15 before it starts to bounce back up. That's how the charts are traded. There are different levels. Just like SPY here.
Yeah.
You saw this, you
Yep.
see this gap here. There is support here, right? What happens when it breaks this support? The next support was all the way down here. So look at this gap. Once this support here breaks, there may be some tiny support in between here, but it's not strong support. Your next strong support is all the way down here. So what happens? It could free fall from 473 all the way down here to this next support at 472, right? And then you see the next support down here, 470. And I guess, when it breaks all this support really hard, it's going to keep falling until it comes all the way down. It's the same thing. Same thing that applies to any other stock.
Yeah, but the same concept too, right? Just being on the right side of the trade. So if the stock like Microsoft, for example, is you figure it have another $5-10 to go, right? And you're holding a put on it, and it breaks through that support at 305. Well, obviously, I mean, at 305, you want to be watching it very careful. So if it breaks below that, then you're laughing if your put is still valid, right?
Right. Yes.
Yeah.
Remember for stocks, right? Talk about a whole dollar, right? So when you're looking at stocks like, say, Microsoft, that's at 314, you're going to have some support at 310 because 310 is a whole number. That's going to be support at 310. It's also going to be resistance when it's going up. Then you're going to have 305 as the next support, $5 increments, right? Then 300, then 295, then 290. When a stock breaks from 290, you're looking for it to go to 295. And after 295, 300 is on the horizon. Then so on and so forth. It's the same thing coming down as well.
Right.
So that's how you trade options. When something breaks, let's say we're actively trading Microsoft right now, right? Or let's say use NVIDIA as an example. When we traded NVIDIA live, right? When it broke above 295, we were looking for 300. And then after the 300, we got 305, right? Does everyone remember that trade when we traded NVIDIA? Right, it breaks above 295, then 300. But let's get back here to the Discord. Networking chat. Let's say if people are in the same area as you, and you could study together. If you want to meet up at a Starbucks, you're like, hey man, let's review these charts or whatever it is. You want to network like that. You can definitely do that. Socialized room. I don't think you really use this. I'll probably delete this one as well. Probably going to delete a lot of these channels. That way it's a little bit less channels in here. Charts. this is where if you have a chart, right, you charted it, you could post it in here and people could give you their opinions on it and stuff like that. You know, chart the whatever you're looking to play, even if it's wrong, don't be shy to post it in here and say, hey, is my chart correct? Right. Then, you know, people in here that with experience, right, Wild Bill, myself, right, Evan, you know, even Ozzy, right,
Yeah,
Edgar,
even me.
right? People in here that, you know, that have been in here for a while and, you know, they have experience, right? And they're learning how to chart, right? They'll critique your chart and tell you exactly what you need to do, right? So, you know, but you have to chart it yourself and post it in here so that we can see that you're trying, because the only way you're going to learn how to chart is by trying. You know, research, look at the patterns, go on your chart, find the patterns and chart them, because the more you do it is the more you're gonna the better you're gonna get at it. Remember, the market trades in trends and patterns. That's it. That's all you need to know, trends and patterns, and you follow the trend, you follow the pattern, and you will be a profitable trader. Food, this is just if you want to share, like, you know, you out to eat and something, you want to share it in here. That way you can always keep the community active. Even on the weekends, people come in, you can just keep it active, keep it friendly. So we can have some fun sometimes on the weekend. News, right? If you have any kind of news that comes out, you know, about a stock or something, right? You post it in here so that way everyone kind of is up to date what's going on with the market. Here I posted the S&P 500, the best and worst performing stocks in 2021. So, you know, you had stocks like PayPal, right? That was one of the worst performing stocks in 2021, which is very, very surprising. Moderna was one of the top performing stocks, which I think everybody would agree from a price standpoint that it was, right? It went from, you know, I don't even remember, maybe $10 or something like that, all the way up to, you know, $500 or something like that, right? But you made people, some people made a lot of money off of it. Some people lost a lot of money because you had a bunch of people that bought the top of Moderna at, you know, 400, 500, thinking it's going to 1,000, right? So if something increases that much, you know, percent on the year from $10 up to, you know, $500 per share, that's like what, 5,000% or something like that. I'm not buying anything that's up 5,000%. So you got to be smart with what you buy. Daily recap. I'll try to do this more often. We'll do a recap in here at the end of the day. You know, how the market closed, the S&P 500, you know, if it fell or stuff like that. Earnings calendar, you know, this is where we post earnings that are going to be coming up for the week. So earnings season start towards the end of the month. So around, I think, well, actually, I think bank stocks start around in the teens, the high teens, like around the 18th or 19th, somewhere around there, if I'm not mistaken. So we're gonna have earnings coming up again. Earnings are always good, right? If we can get on the right side of them, you can make a lot of money on them, a lot of money. Watch list and alerts, daily watch list, right? This is for day trade watch list, the daily watch list, but not really doing those right now. Because as I said, most of you guys probably can't trade the penny stocks to make a lot of money because they're already limited on day trades or something. Options is the best way for you to make a good amount of money with, you know, you put $100 into an option, you get 10x it, right? You get 20x it. That's the beauty of options. You don't have to put a lot of money in there to get a huge return. Options watch list, right? This is where I send out the watch list. I come in here, you know, 9 times out of 10 it's going to be on a Sunday where I do a comprehensive watch list. So I'll come in here and I'll check all the tickers. You know, you see here, Apple, Affirm, whatever. I'll chart them. These are the levels, right? Firm over 106. That was a critical level. It had to break over 106 for it to push higher. Now when we say break over 106, right? I'm going to go on the daily chart. You're going to see why 106 is a critical level. This is how you want to trade options. Now you look at Affirm as a trader, you're like, oh man, Affirm is down here at 80. It could come all the way back up to 85, 86, right? But guess what? If it doesn't have any kind of buying pressure, no one's interested in it, you're going to be relying on hope. So when we say over 106, we're going to come here. This is our trend line on our daily, right? There. Look what 106 is at. This is 106 right here. Once we get above here, we're looking to gap up to 128. This is how you trade options. Over 106 has the potential to get you to 108. And that's what everybody is seeing out there. Most professional traders, this is how you trade options, and this is what you're looking for. You're looking for this to break over 106. That tells us that there's momentum and there's buying pressure, right? And you're most likely going to get a bullish engulfing candle once we get over here, and then we push up towards here to fill this gap. So that space in between here, right, around 106 is that gap, right? Maybe 107, somewhere around there, right? 106, 107. I'd have to use E-Trade to chart it. I use E-Trade most of the times, but TradeZero chart is out of this. But right around 106, right, that is a critical level for it to break. And you push up towards here. And after there, you know, you can push up towards here, this peak, and then it pushes up here to fill these gaps going back up. Just like they felt, you know, the gaps coming down, though when they start to push back up, you're still going to have the levels, right? They're not going to be gaps anymore. They're going to be levels that they're going to push up. And you can see a firm kind of look like had a little bit of a head and shoulder as well. A head here, a shoulder, and this shoulder right here is not really formed, but you can see it right there. Now you have another trend line right here. Right, this is your little channel. It doesn't have to be symmetrical or anything, right? You leave it right there. You can see it could keep falling and fall all the way down here, but most likely it's probably going to fall down here to support at 66.
Yeah, because it has a gap there to fill up to, right?
Mm-hmm. Yeah. So you see this right here, right? This was earnings. When it beat earnings and it gapped all the way up, you have this huge gap in between the candle right here. You see what happens? It comes down to fill the gap that it created in the chart. 9 times out of 10, they're going to fill the gap. And you can see right here, another gap as well. So it could come all the way down to here at 68 to fill this gap before it bounces up. So that's why you don't want to play call options right here, because you say, oh, a firm fell from 176 down to 80, you know, or 76, it's going to bounce. It has to bounce. No, you want to give it time to get above this critical level right here, because what happens if you take a call here and it falls down to fill this gap here? You're going to lose your money.
Take a put.
You take a put, right? So you don't know where it's going to go until it, you know, it gives you a signal. You want to wait for the signal before you just jump, before you jump in it.
I have a question.
Yeah.
So is it that once you see it hit 106, you do a call, and what do you set as your strike? How do you determine that?
So, you know, your strike could be whatever you can afford. Whatever is in the money or closest to the money is what's best, right? So 107 or 108, whatever is on the options chain is, let's say it's at 106, right? And you look at it and you say, oh man, a 107 or 108 call that expires 2 weeks from now it's going to cost me $300. I could buy that one. Or if you see, you know, 110 that costs say $150 2 weeks from now, then you could buy that one. It all depends on what you can afford from your with your account, what you're comfortable spending on a premium.
Okay.
But
one more question. In some of the posts, you've mentioned a confirmed break of 106.
I'll get to that one just here in another sec.
Okay, so we don't have to take that into account when we're looking at this. That's different.
No. Yeah,
Okay.
This is different. Yeah.
Thank you.
You're welcome. So so you know, that's why options, you want to play the levels on the chart, right? Just like a Tesla, right? You know, if you look at the levels, you say you get over 1,030, you can push up to 1,060 because those are the levels on the chart. Options traders, people are trying to push options in the money, are going to look at that kind of level and they're going to trade the levels of the chart. So this is where I get a lot of questions about the daily SPY plan, right? Let's go to SPY here. So the daily SPY plan, we have calls. Take a 469 call 1/17, that is your expiration, right? And a confirmed break of 468.86 resistance, right? So we have resistance at 468.86. Once we break above 468.86, you're looking for the price to hold above 468.86. Look for one candle to close above 468.86, and then you take an entry. So if you look at this right here, 468.86, right? We had resistance right around here, 468.86, right? What happens? It broke above the resistance, but the price could not hold above the resistance, so it pulled down. So you're looking for a candle to close, right? This is a wick, it's not a candle. This candle did not close above the resistance. And so it pulled back off of resistance. 9 times out of 10, stock is going to break to resistance and pull back down on the resistance, and then it will retest that resistance again. So you want to have a candle that closes above 468.86, and then you enter that trade, right? So wait for a candle to close above it. Normally, you can wait for a 1 minute candle or a 5 minute candle to close above that price. A 5 minute candle is going to give you a little bit more of a higher entry, because if you have a 5 minute candle, you know, this 5 minute candle here, it went all the way up to 469.20, right? So if it closes above, it's probably going to close up here at 469.40, and then, you know, it's literally 50 cents away from above 468.86, right? So, you know, that's a lot of room in there for profit. So you can use a 1 minute candle that closes above that 468.86. Now, when we get to P1, that is price target one. So price target one is 469.56. All right, so when we get up to 469.56, that is your price target has been hit. That is the first price target. You're going to take profit all the way up here, right? That is all you need with the SPY. You just need to, you know, that's a 70 cent, 80 cent move right there, right? You have one contract, let's say it cost you $100, you're probably going to make 130, 140 bucks. PT2, right? That is price target 2. That is where, you know, if you have more than one contract, right? If you had 2 contracts, you would sell the first contract at PT1, and then you have another contract that you sell at 470, which is price target 2. So now let's say you have 3 contracts, right? This is where your free runner PT comes into play, where you sell 2 contracts at the first price target and the second price target. Then free runner, which is when we say let your runners run. So free runner PT is 471.19, right? Because we're going to run into resistance at 471.19. You sell there. And if it breaks above that, if you watch it and it breaks above that 471.19, you can just let that one contract run. That's why when you hear people like Ozzy say let your runners run, that's what he means. If you have 2 contracts of something and you see and you think the stock is going to go higher, you sell one contract and you give it room for the next contract to just run all day, and it keeps running and running, right? SL, that is your stop loss. So let's say we got in at 468.86. I'm telling you, when this thing pulls back down to 467.88, I want you to stop out here for a loss, right? Because that's how you have to trade. You have to have a stop loss in place, because no trade is going to go in your direction all the time, right? You'll get lucky and it just keeps going up and up and up, right? You're going to get lucky. But, you know, majority of the times, they're probably not going to go in your direction right away. Always have a stop loss in, right? Any trade that you enter, always go in with limit, you know, how much you're willing to lose, right? If you spend $200 on a play, say, hey, you know what? I'm willing to lose $50 on this play, and then I'm cutting it there, and then I'll look to re-enter the play. Do you set the stop loss on Active Trader? I am not familiar with Active Trader.
There's another way. that I personally use. I don't know if it's applicable here, but you can verify. Let's say I'm entering at the top of that bar because it didn't go over on the spy chart in front of us, right?
Mhm.
Right where you have your mouse there. Now I see that didn't go that way, so I decided, you know what, I'm gonna take a put
Right.
on the next red bar, right? So if you look at the red bar and you say, fine, I'm entering there, boom, right?
Mhm.
Okay, so it falls down. I'm in that bar. I entered somewhere along that bar because I'm not really at the, it's starting to form. So halfway through, if that's a 1 minute bar, so 30 seconds in, I'm in, right?
Mhm.
So it forms that one bar. Now my stop loss, I would not lose that bar. You follow?
Yeah. Right. Yes. Mhm.
So it goes down to the second red bar,
Mhm.
right? I move my stop. So I
Yes. That
protect that bar.
so you protect. Yes. Exactly. Then that's what you're supposed to do as a
Get
trader.
that. Right.
Right.
Yeah.
So what Ozzy's saying, right? Let's say he entered a put here in this first red bar right here, right? And then next thing you know, you're down to the second red bar here, right? He's in profit in his put, right? He's up here. You push your stop down to here, so that way if this thing reverses on you, you're at least getting out with some profit. He's not getting out red. That's what he's trying to say, right? Am I
Exactly.
correct?
Correct.
Right, exactly. And then let's say he's in profit right here, right? Let's say he's up 20% here, and then you have this huge flush here, and he's up 60%. Put your stop loss at 50% somewhere here. And then as it goes down, you're up 100% here. Put your stop loss at 80% profit. And you keep pushing your stop loss when it keeps going down. That is the correct way to trade.
Yeah. So now it's down at the bottom. You get a little green bar, right?
Uh-huh.
You lose half a bar,
Yeah.
right?
Mm-hmm.
So I say, well, I'm not going to lose the whole bar. So, okay, so you allow it to go another one. So I might lose when it comes back up. I see that green matches that. I say, that's a reversal pattern in my mind. I'm getting out.
Right. Yep.
You know?
Yeah. Yeah, because if you entered up here, right, you're probably going to be up 250% on an ODT, same
Easy.
regression here, maybe 300% from this drop, down here. Let's say you're up 300% here, right? If you do not have a stop loss, maybe somewhere around here, when it starts to reverse, let's say 250%, and this thing gap when it gaps this hard with volume and it rips here, then it rips here. And here, when you're in here, you just gave back maybe 200% profit literally from this thing ripping. These are 5-minute candles, right? So 5 minute, 10 minute, in about 12 minutes, you're giving back at least 200% from that
50%.
300, a lot of
50%
percent.
easy.
Easy, right? Because it gapped up so fast. So that is what you want to do. You keep pushing your stop loss once you're in profit.
And the same in the calls. And the reverse is true in the calls. Like, if it goes up, because like, let's say I switch horses now, I'm going the other direction at the bottom on that spy because I could play the spy all day. Once there's movement like that, right? So you jump in there, that first bar, at the top of that first bar, because, hey, you decided and then you get the order in place and everything. It's already 5 minutes, right?
Yes, exactly.
So I'm at the bottom. I'm in at the second bar going up on the large power bar, right?
Right.
So,
yes.
Now I got 2 bars up. I'm out at the top.
Yeah, you're
Again,
out at the top. You got these 2 full bars here. You get out around here, or you put a stop loss here just in case it
that's
starts
where
to
you
go
move your
down.
stop and you're watching your stop.
And you're watching
right?
your stop. Yeah.
Right.
Exactly.
So it moves, it takes a rest and then it shoots up again. Right.
Yeah.
And now you got that last green one at the top. And what happens? A matching red one. You know what?
Red.
That's resistance right there.
Yeah,
Double
because
top.
you have a double top, right? And you see what happens. Now you're starting to come up to this trend line right here, right? So once the spike, you see what happens, right? This trend line here is what the buyers needed on Friday for us to clear, to push up towards that 470 area, right? But look what happens. You try to come here, they reject it early. Right here towards the end of the day, when we look like we're going to break out, look, right? They rejected it as soon as it broke above this line, and then they slammed it at the end of the day. So, you know, whoever is trading out there, they're seeing the same exact thing that we're seeing, right? You just have to apply it and they're going to slam it. So when you see this trend line here gets rejected this hard, you see this nasty red candle, go ahead and take it put, because it's probably going to slam down harder. They're not going to let it go back up into an uptrend just yet. And that's exactly what they did on Friday. They slammed it down. You know, this right here is a 468, right? All the way back down to 465.91. So a $2 drop that fast.
Then look at it again by Monday. It's not there yet, but Monday is coming up, right?
Yeah.
Now,
So now it's going to have to break the line. Now you see the trend line is a little bit
Yeah.
lower. So 467 is probably going to be around what we need to get over. And then, you know, then this is going to become resistance once you break above the line here, around somewhere around here. I'm saying 467, right? When we open up, we're going to have to push up here now to this gap here to 468. And then after 468, we're going to look for this thing to break above here and then up here. And then we push higher. So you see, every time a chart is going to create gaps and stuff like that and levels, it's always going to create levels for the stock to push up. And when I draw this line, when I extend this line coming all the way down here, what you're going to see, right around there. So we had this flat line here as support, right? When you look at a bigger picture, what pattern is this? A huge line coming down, and then this flat line coming here. Everybody, what was that?
I just say, I was going to answer, but I figured I'd let somebody else take a shot at it.
Does anybody know? We've seen this pattern a lot of times, right? So
Downward wedge or triangle, whichever one.
So that's going to be your descending triangle, right?
Yeah.
So this is what your descending triangle looks like, guys.
Zero.
Yes.
I'm sorry to interrupt you like this. I got to get ready and go to work. This is being recorded, correct?
Yes, it's being recorded. Yes, you're good.
And where would I find this again?
I will upload it onto YouTube.
Okay, thank you.
Yeah. Yeah, so I'll post it in the YouTube channel that's in the Discord, and you can access it from there.
All right, thank you guys. Have a great day.
All right, thanks
Have a
for
great
stopping
one.
by. Have a good one. Right, so look, right, this line coming down, then we have this flat line, you know, either one of these lines here, we're talking about a huge descending triangle, right? You see that flat line at the bottom, this line at the top. So what a descending triangle tells us, you see, where we come up, look where we come up here, we hit that top, right? We get rejected, we come up again. If you're following from the left to the right, right? So this is where I'm at right now. So this is me right here. This is me going up, coming down, then we go up, hit the top again, then we come down here, we hit the top again, now we're coming down. So what we're looking for now, what you see that's happening in front of us is a SPY is most likely somebody mute your
Yeah,
click, please.
yeah, so you might have to mute. You might have to mute him because it's yeah.
Okay. All right, so let's do that again, right? So follow my mouse, right? This is where we're looking at. We're looking at this right here, this green line going up. That's going to be this right here. And we get rejected and we come down, which is this red line right here. And we push back up, we touch the line. We didn't touch it all the way, but it still counts, right? And we come down, and then we go up and touch it again and down, right? So now we're probably around here, right? So now we're looking for the SPY to touch this again. So what are we looking at? You know, if you're gonna make a guess, right, you're gonna lean towards this thing falling down based on what we're seeing right here. It looks like we're gonna fall down maybe next week. But who knows what the market is going to do on Monday? We just don't know. But what the pattern is telling us is that 99% probability, maybe a 90% probability, right, that we're going to fall down next week again, because you're seeing this descending triangle in front of you. So that's your descending triangle right there. Now let's talk about the puts on the SPY plan, right? So take 467 put 1/7, right? So 1/7 is your expiration. 467 is your strike price. If you don't know how to do options, right, make sure you're approved for options first. Then you go in your options chain window, you type the ticker in whatever broker you have. Just, maybe do a YouTube or something. Get familiar with your brokers and the mobile app or whatever it is that you're playing options with. Most of them are fairly simple. You find the expiration, you find a strike price. And so it says, and a confirmed break of 467.25 support. So we had support at 467.25, right? Right around here. We had some support at 467.25. So now you see what happens when we break support, right? You have a flush down here, then it kind of wicks back up towards that support. These wicks in here is because it dropped hard. Then, whoever is buying out there, whatever algorithm they have, is going to bounce it back up a little bit towards that that support that just cracked. Right now, it gets rejected at the support again. You see what happens when you keep breaking support levels and it goes down, right? You have this nasty red candle that follows. And then, your price target one is going to be 466.51, which is going to be right around here, right? So when you break support, you get some nasty drops in this thing, right? Then your price target two is going to be 465.87. So, once we start cracking all these support levels and stuff, I'm not going to put all the support levels on the SPY plan because it's going to be way too much support levels. But, you have support here as well, 466.26. And you see, once we start breaking support, this thing is just going to fall down. Now, if your inputs here, price target two is 465.87. Same thing applies with the calls, right? You have more than one contract, you let one. You take profit on one, you let one run towards the price target two, right? You have two or three contracts, you take two contracts off, one at price target one at price target two. You the third one run for a free runner PT, which is 465.48. 465.48 is where you're going to sell your last contract. But if you want to just let it go because you've already collected profit on two contracts, that third contract is not going to erase your profit because you're already taking so much profit on those two contracts. So you let that one contract run. Right. But as soon as you see it start to reverse, right? Remember the stop loss is at what? Did I forget a stop loss in here? Yeah, I did. So I forgot a stop loss in the puts. But as soon as
stop
you
loss should
that,
always be psychologically, you always protect you of your trade, right? So you should know your stops automatically, how much you're willing to lose. We have what percentage. So I don't use percentage. I just use bars. I'm not going to lose a bar, right?
We
use percentage.
You adjust it to what works for you. That's what I'm saying. As a trader, you adjust it to what works for you. What works for me doesn't have to work for you, right? Everybody's account is different. That's what you guys have to understand, is that everybody's account is different. Let's say my daily goal or my monthly goal is $1,000 profit. Your goal may be $500 profit, right? You can make that $500 profit in a week and you're done for the month because that is your monthly goal. Sometimes when you hit your goal and you start to overtrade, you end up giving back all of what you just made, which was your monthly goal in literally one day, right? That happens to a lot of traders. But you also want to set your goals to something that's realistic with your account size and not something that's unrealistic. You can't have a $10,000 account and say your daily goal is $1,000 because you're going to be putting up way too much capital with a $10,000 account to make $1,000 a day. People that make $1,000 a day are the people that have over 25,000 because they could go into trades multiple times, right? They're not limited to day trades. You could scalp. You're right, scalping for $100 here, $200 there. It's easy when you're over $25,000 to make $1,000 a day. And I'm sure everybody in here would be happy with $1,000 a day because that's $257,000 a year, right? There's 257 trading days in the year. If you make $1,000 a day, I'm sure everyone would be happy. Now, as your account gets bigger, you have 100,000, right? 2,000, 3,000 is easy every day. just trading a SPY alone, you can make 2,000, 3,000 easily a day with $100,000 account, even a $50,000 account, $40,000 account, you can make $3,000 a day. But you have to study it and you have to know what you're doing. You have to have risk management and you have to know how to chart. Most importantly, you got to watch the price action. Now, a little bit off that topic here, your chart and your patterns are good, right? But you also have to watch the price action, which is level 2. That is another thing that you have to learn, but don't try to learn everything at once. Learn the chart first, then you can learn the level 2 after, which is the time and sales, right? Level 2 is showing you all the bid, all the ask and all the sales, all the prints, all the orders that have printed. This is going to be your time and sales, what's printed here. For beginners,
That can be distracting.
It can be distracting, right? Because a lot of numbers, looks like the matrix running down your screen. E-Trade Pro has the best level 2 for beginners. It is the best level 2 that you can actually use. I'm going to go back to my E-Trade level 2 as well. I think you only need to pay, all brokers charge you for level 2. But some brokers don't, because if you trade from my broker trades here, if I trade over, I think it's 100,000 shares per month, my level 2 is free. But if I don't hit that 100,000 shares per month, it's going to be $59. I think E-Trade was $59 as well. Some brokers are more expensive, like Centerpoint Securities. Most people don't know about that broker, but that is another good broker out there. One of the best, actually. They charge a lot for commissions. So if you have a small account, you don't want to use brokers like, well, I think their account limits are 30,000. You have to start with 30,000 for those brokers, like Lightspeed, Speed Trader, Centerpoint Security, Cobra. Those brokers charge a lot in commissions because their execution is light and fast. They have direct routing orders, right? So your order, most other brokers like Webull, Robinhood, E-Trade, Thinkorswim, right? They don't have direct market access. Their orders, it goes through a routing system. So that's why sometimes you have bad fill. Like you'll hit the button, right? You wanted 1,000 shares and you only got 500 shares filled, maybe 200 shares. It's because they don't have direct market access. Brokers that have that are going to be more expensive and they're going to charge a little bit of commissions, right? Because it's just how it is for you to get that fast execution.
I have a question
Yes.
related to risk management and setting stop losses. How do you weigh that in the context of your expiration date and the time you have remaining on the contract? So let's say you have a week left in the contract, but you're seeing that you may have already reached the 20% or 30% loss. Do you just go ahead and cut your losses, or do you, because you have time left in the contract, do you try to see if there's an opportunity to recover?
No, you go ahead and cut your loss right away, because here's the thing, right? Let's say you have an Apple call that expired. You took what's Monday? Monday is the 10th. Let's say you take an Apple call this upcoming Monday on the 10th, right? And you took a 175 call, right? And you go down, let's say 30% right away. Let's say Apple drops about $3 or so after you took that contract, and you're down about 30%, right? What you got to remember now is that Apple dropped $3, right? When you bought that contract, let's say Apple was selling at 173, now it's down to 170. When it goes back to 173, you're going to be losing money still, right? Because of time decay, right? So this stock now, you can use options profit calculator. It tells you exactly what it needs to go back to for you to start breaking even. It's probably going to be 175, somewhere around there. For you to make profit, it's probably going to have to go up to like 177 or somewhere around there. Maybe I'm a little bit overestimating, but you're probably going to have to average down so that when this thing bounces back up, you start making your money back. So averaging down is also not a dangerous thing, because how do you know it's going to bounce, right? What if you keep buying the dips and then it keeps going down and keeps going down? So it's better for you to cut your loss at that 20, 30%. It doesn't matter what your expiration is, right? because it could keep bleeding, right? Next thing you know, you're down 50%, you're down 60%, and for you to recover 60%, the stock is going to have to do something pretty much really magical. It's going to have to bounce, $5 or $6 in a day, $4 in a day, or something like that, right? So just cut it and move on and look for another entry. Now, let's say you had bought Apple at 173. And you cut your loss when it's at 170. Now you see Apple bounce back up to 173. What you do is you re-enter based on your plan, because it's back at the price where you entered. You can say, okay, this was my plan. It's back where I entered. Let's try this again. And you try again, right? But you don't get bummed out because you cut it at that 20 to 30% loss, because that is the right thing to do. So don't let your expiration, if you have something that expires a year, yes, but something that expires a week, 2 weeks, most options are done 2 weeks out, right? But even those sometimes are not safe, because when you get a market drop like we just saw in SPY, right? Let's say you were loading calls up here, this 479 area, just last week, right? You bought 480 calls, expiring 2 weeks from when SPY dropped here. And now SPY is down here to 460, 465, wherever it's at right now. That's a $14 drop. In 2 weeks, the SPY has to go, unless you average down hard here, the SPY has to go to at least 485, 486 for you to make that money back, because it's dropped so much. Does that make sense?
There is an example. You could probably do a live example. There was a call on what is it? AMD 200 call we did. And,
yes, AMD.
Yeah, if you could pull up on that, and you see that after we got in the call, it just tanked, just went boom, opposite. Yeah,
exactly.
So you could probably use that as a
good example.
A live example.
Yep. So thank you for that one. That was a good one. So yeah, AMD, right? We got in. What price was it that we got on? I think it was around maybe around 155, somewhere around here, right? I'm thinking it was around here. So this is an example, right? We got in. I think it was around here, 158, right? We're looking for 200 calls expiring. They were like 2 to 3 months out, right?
Yeah,
I think it was like 2 months out or 3 months out.
The 21st of January.
Yep. Right. And you see, what happens, right? When you get caught in a market drop, look at this right here. If you don't cut 20, 30% loss, look at this. Every time it bounces, look at that, right? Now you're back holding this thing all the way down. And for this to recover, even though your expiration was 2 months out, it's not going to recover. Something, magical is going to have to happen for this to go from 130 back to all the way up here for you to make your money back. And when it comes up here, you're not going to make your money back. It has to go to maybe 180 based on this huge drop and with time decay for you to make your money back, right? Or you're going to have to average down hard here. Let's say you bought 2 contracts here. You're probably going to have to buy 5 or 6 contracts here now for it to break back up, for it to push back up for you to recover that money. So, 9 times out of 10, it's best that you just cut your loss and then you move on, because, let's say you cut a loss on that call that you had, right? Or that put, and it goes in the opposite direction. What you do is you flip to a put. And if you lose 30% there again, you're like, oh, well, man, I just lost 60%. You just move on from that, take her alone. Just leave that one stock alone, because obviously it wasn't working for you with a call and it wasn't working for you with a put, right? So, if something's going against you, whatever stock it is at, you cut it for a 30% loss, it looks like it's going to fall down, try a put. And that put could make you back your 30%.
Yeah.
So, right.
No, but in this particular instance, it was left alone. And I think Option Gamer, we spoke about that this morning too. Up Gamer, somebody, we spoke about that this morning as well. I'm going to hold it until next week, because the following week is when it expires, right? Mm-hmm. So you never know in this market what could happen. But I'm going to hold on to it. It's already down. huge percentage. I'm not going to try to chase it or try to average down on it or anything. I'm just going to watch it. And if it bounces back up and I see like it's going to probably reduce some of my losses, that's the best I can hope for, you know?
Yeah, that's the best you can hope for, is that it bounces back up. And you know, if you're down 80%, you're down 50%, you get back 30%, something like that, right? But yeah, you know, it's best. I hope that answered your question. You know,
It does. Yes, that was very helpful. Thank you.
You're
You're welcome.
So, you know, we'll also use the SPY plan here as an example, right? So, you know, let's say you took the 469 call here, right? And you cut it for a 20% loss at the recommended stop loss, right? Now you see the stock is going, looking like it's going to fall down. You go ahead and you take the put, look at the put. The put's going to make you 200%. So if you had cut, that's why it's important that you cut your losses quick, because the call, you cut it for a 20% loss, right? Let's just say you entered up here and you cut the call when it pulls back here for a 20% loss. Then you enter the puts. Look at what the put is going to make you. It's going to make you 200% based on this drop here, 200%. So now, you know, you cut your tiny loss, and then this put here gave you back more than your loss, way more. So that is another way to look at it as well. So let's watch list. So let's get back to the Discord here. Watch list questions. Those are the questions that, if you have any questions about a watch list, if I put out a, you know, a level in here, and or if you see something that out there that's not on the watch list and you have a question about it, like, hey, you know, Zero, can you check this one or add this one? Or, you know, if you think my levels are wrong or something in here, if I miss a number or whatever it is, right? You know, if I let's say I have Tesla at 107 and I missed the 3 digits here, you could put it in there, ask a question. It's like, hey, you know, something like that, right? Just ask questions based on anything that's in the watch list. The stock bot, is it still working? I don't really use it anymore, but this is for where you can check, you know, the float of a stock, right? For the new guys in here, most people that are already here know how to use it. So you're going to check the float. Let's see if we can pull up float, Apple. Right, so you type exclamation, float. You got to make sure it looks like this, right? Lowercase, exclamation, lowercase, then Apple. I think it has to look like that. Well, no, I guess not. So Ozzy did it here with lowercase, and then it came up like that. So that's how you do it. You can pull up the float. New people, if you don't know what the float is, that is the amount of shares that are available on the market for us to trade, for retailers to trade, right? You can see Apple shares outstanding, 16.49 billion. The float is 16.39 billion. Insider ownership, 0.07%. Institutional ownership, 58.80%. News, if you want to pull up the news on Apple and EWS. Ticker symbol. Should pull up the most recent news that Apple had, right? So you see there 5 hours and 17 minutes ago, you click on this and it's going to take you to the link on your browser. Chart, right? You can pull up the time frames for the chart. You can see here C2, I think C2 is daily. Yeah, so you see daily chart here, which is what you see on my screen here for SPY, right? So this is Microsoft's daily chart. You use C2 to pull up the daily, just in case you're on your phone or something, you don't want to be on your computer, you can pull up daily chart. But you have to know how to read the charts, right? Before you can pull these things up. That way you can look at the chart and say, okay, you can see your imaginary lines here. You see your downtrend line here and CRWD, right? Right there. And then you draw your line right here, connected this part right here. And then you have your descending triangle right there, or your that insider. If you want to see top insiders for a certain stock, if you're interested in that, and you can see that there. balance sheet. If you want to check your balance sheet, you can check the balance sheet. Cash flow, right? So it tells you right here, exclamation, whatever, and then you put a ticker symbol. Gainers, you want to see the stocks that are up the most on the day. Popular, most popular stocks that are out there for the last 60 minutes. Earnings, I don't know why this doesn't work. I have to check to see. Auto ticker info, it's stuff like that here. Live scanners, those are just the scanners that I have. I have trade ideas. I've turned it on for you guys for I think it was a couple of days. I have Holly, right? Holly calls out all the tickers that are getting volume, right? Some of you guys have heard it, but if I leave it up and you guys are on Zoom, it's going to be really, really distracting because Holly just keeps going and going and going and going and going. Education, right? This is where, we post educational stuff. Suggested videos, right? I posted some videos in here that all of you guys should watch, right? Go to this YouTube channel. This is where one of the discords that I learned to trade from. It is very, very expensive, so make use of it. Watch these videos in here, click the YouTube link. There's a lot of videos in there, right? You see last Friday how I was able to tell where the stock was going to come at, where the candle was going to close at, where the candle is going to fall down to kind of stay right there, right? Because those videos teach you where I learned on how to candle average. SPY, how did I know Friday that it was going to come when it when it was moving, right, and it went up here? How did I know it's going to come to this purple line right here before it fell down? Because I know how to average my candles. So follow those videos in there. You watch the videos and you'll learn how to trade, right? They're worth it, and they're very, very expensive. So make use of it, but please do not share them outside of the Discord, because as you can see, I said here, these are the materials that you have to pay for. This is their sales material, right? They make these videos and they live trade them, and then that's what they sell to their customers, right? So they paid to learn, right? They didn't just learn, they paid to learn from somewhere, and they're sharing what they have made, and they've done their own thing to it, right? And then they're selling it back to people, and they don't have to, right? Because these guys, they're big traders, they're big retail traders, they make millions of dollars, but they have a business, and they have traders in there, and they're willing to help people learn how to trade, right? So watch those videos in there. There's a lot of videos. It's going to take you a long time to watch them, but watch them. Educational chat is where you post educational stuff, right? These are your patterns, right? Your cup and your handle is a bullish pattern, right? So it's your cup. You see these patterns happening all the time in front of us, and you break to the upside, right? Your bearish pattern, you have your inverse cup. So most of the things are going to be inverted. Like, your cup and handle, it's just a regular cup and handle, and then inverted is going to be pretty much the opposite of it. Your ascending triangle, right, which is bullish. Then you have your descending triangle, which is bearish, as we talked about, right? That is bearish that you're seeing over here. Your double top is a bearish reversal, because once you double top, that is resistance. There's a top there. You have the horizontal line coming across. You hit resistance, and it comes down, and it touches that resistance again, and it pulls back. So there's a double top. And you can see double bottom, which is going to be bullish, which is the opposite. So it's an M right here, and here it is a W. So this is what we call a W pattern. So when you see a W pattern forming, pushes up. So then you have your inverted head and shoulder.
Yeah, when you see that W, you say, wow. When you see that, then you say, madness. Down.
I swear this dude never keeps his phone charged.
Needs to get a little plug-in right next to his computer, right?
Yeah. Oh, he's still going.
I know,
Oh,
like
great.
it just
Your phone died.
should text him in there.
Yeah, tap it in the Zoom chat.
Hey, you're going mute, man.
I don't know about that covered call stuff you're talking about, Ozzy. I mean, it's.
Okay, so what a
I
covered call is?
understand it. No, I understand it. It's
No, well,
just.
okay. So covered calls are basically you own the stock already, right? You already have it in your portfolio. You own the stock. It's just sitting there, right?
Yeah.
And
Yeah. 100 shares and you contract it out as an option, put or call.
yeah, you sell a call.
But-
You sell a call, you get the premium.
It's like Monica, she has 100, that's 31 grand of exposure in Microsoft with the triple top.
No. What happened was she put a she exercised an option for that.
Yeah.
Right? It cost her 31K. But the thing about it is that she had a put, right? She bought a put and it fell below the put price. So the guy wanted to get rid of the Microsoft because let's say he bought it at I don't know, maybe a little bit more expensive, and he decided to sell his put on it, and she bought it, and he didn't want the shares, so she exercised it at a 31K. Now that might tie up a lot of her capital, but then now she's stuck with the shares. Now Microsoft is already in a downtrend, right?
Yeah, it just about entered it on the last trading day. Broke through.
Yeah, but it's been in a downtrend for if you look on the daily, you'll see how many down days it has, maybe 5-6 days, right? Who knows where it's going to end? But the thing to do is to go $10 above the price and sell a call. So now you get premium on the call, right? And the stock has to finish its cycle and then turn around and go back up, right? Before she can. Yeah, and in any case,
280, 284.
Pardon?
The next resistance down like 180s is where it's gonna free fall to, and something big happens before
305
earnings
or
on
something like that.
20ish.
Yeah.
Well,
So if I
almost,
sell a call,
But
if I sell a call, what is it now? 314, right? So if I say I
13
want to sell a call at 324, right? And the stock does turn around and hit 325, I can sell the shares because I bought it at 315. I made $10. Sure, you can say, oh yeah, take my shares. No problem. Somebody's going to pay 31 to 35K. So you made $4,000.
Just seems like steps. That's all.
It looks like what?
Extra complication. It just seems like extra complication.
Not
into
complication. You see, once you understand the principles of the call and the put, it's simple.
Well, yeah. I mean, I'm not saying it's a bad idea to do those things, to do covered options and puts, right?
Yeah.
It's just we don't have traders with cap in order to utilize something like that.
How many of us have the the stocks like that in their portfolio?
Well, the buying power to purchase that much, it's probably like less than a couple, within the group chat.
Well, right, because $31,000 for 100 Microsoft, right? Right now, $31,400 is what it would cost you if you're going to buy it right today, right? But we don't have that. I don't have that kind of capital tied up in stock, right? So, so that's the whole name of the game right there.
So
right? Go ahead.
This isn't quite something that we need to be teaching yet. Okay, it's not that it's completely discouraged or overcomplicated or anything like that.
No.
Why would we
It's-
focus on such a prestigious strategy? Because you got to be up there past day trading 25K mark to really take advantage of covered options.
Well, some people, okay, the way I look at it, day trading and investing, two different animals,
Of course,
right?
completely.
Okay. So if I'm an investor, I'm buying stock, right? And if I have 100 shares of Apple or 100 shares of Tesla or 100 shares of anything, and it's just sitting there, yes, I might be getting some premiums, not premium, but I'm getting dividends on some of them, all right? Once
Right.
every 3 months, I can just maximize ownership of those stocks, right? By selling calls and puts. You follow what I'm saying?
Yeah, I understand. You just buy your 100 and do it.
Yeah, you say, well, I
Yeah.
have 100 shares covered. I don't cost me anything. I already own it, right? I probably
Right.
bought it 10 years ago for $15. Today it's $115. Okay, so what? It's in a downtrend. It's coming back down towards my $10. I say it's now 115 today. You know what? I'm gonna sell a call for $120, right? Somebody decides, yeah, that's a good price. I'll buy it. Fine. What's happening? You know it's in a downtrend now. So the price keeps getting further and further away. Chances are in a week or 2 weeks, whatever the contract expiration date is,